Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, current low PGM prices not reflective of supply-demand fundamentals, and new electrochemical PGMs demand on way, iridium scarcity fears ease still further. Platinum group metals prices, where they are now, do not reflect the medium to long-term supply-demand fundamentals.
These factors we see it as short-term anomalies. Like we had short-term anomalies driving the exceptional pricing level in 2021, 2022, the same is now happening at the bottom end of the cycle. Now, I think some of the key factors that have contributed to this big drop in the price has been destocking. It's been well documented that there's been a significant destocking of rhodium by the fiberglass manufacturing industry in China. So that has contributed to the sharp decline in the rhodium price. And then there's also been a movement of Russian palladium to China at arguably at a discount. No one has put a real number on the extent of that discount, but that's another big contributing factor. But I think overall, one of the other drivers that are not so much talked about and which might not be one of these shorter term distortions that I talk about is we have seen global vehicle sales coming in lower than expected for the last 2 or 3 years or so. So essentially, we just haven't sold as many internal combustion engine vehicles as we anticipated. And I think that is part of the larger, and I would say, more challenging situation facing the market, and that has contributed to the drop in prices in our view.
A far-reaching new drive is underway to ease iridium scarcity still further, and especially in the short term, demand for platinum group metals from electrochemical processes is underway.
So really, we see the challenge of iridium being twofold. So the first is cost. So iridium currently costs about $5,000 an ounce. So it's an extremely precious metal and quite expensive as a raw material into electrolyzers. But the second is really what we think is the more acute pain point, which is supply chain constraints. And so really, as PEM electrolyzers start to scale a bit later this decade, we foresee some supply chain crunches associated with iridium, where not every electrolyzer manufacturer is going to be able to secure as much iridium as they need to produce the number of PEM electrolyzers that they want to. So just by some quick back of the envelope calculations, currently to make a 1 gigawatt of PEM electrolyzers, you would need about 400 kilograms of iridium. And the global production of iridium is set to be about 7.5 tons per year. That number has remained fairly consistent over the past years and is forecast to remain consistent heading into the future. And so the difference there is it's really to make 1 gigawatt, you need 400 kilograms. To make, or rather, the entire global production of iridium is about 7.5 tons. So that's about 1/20th of global production. But the challenge arises because by 2030, current forecast estimates that we'll be deploying close to 10 gigawatts of PEM electrolyzers per year. And so very quickly, we start to run up on what is available for PEM electrolyzers in terms of iridium supply. And of course, this is not to mention all of the things that iridium is used for today. That is other chemical processes, existing electrochemical processes, things like electroplating and electrowinning, and then other applications like electronics and spark plugs. And the demand for iridium for those other applications isn't going to go away either. So we anticipate a pretty significant supply chain constraint associated with iridium in the coming years.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.